studying your last two. I swim med tid when they turned in. The staring down to mute. And can learn the pole that sunk he died.
One of the most common misconceptions in family-owned businesses is the belief that family members can be treated differently from other employees when it comes to payroll administration. However, from a payroll and compliance perspective, CRA expects family member employees to be treated just like any other employee. That is the key message of this slide. On the left side, we see examples of family members working in the business. This could be a son helping with technology, a daughter assisting with administration, or a spouse managing bookkeeping and office operations. On the right side, we see traditional non-family employees performing similar roles within a business. The important point is that CRA does not focus on the family relationship. Instead, CRA focuses on the employment relationship. The questions CRA asks are the same regardless of whether the employee is related to the owner. Was work actually performed? Was the compensation reasonable for the work completed? And are proper payroll records being maintained? These are the questions that matter. Notice the large equal sign in the center of the slide. This symbol represents one of the most important principles in family business payroll planning. A family employee should be treated the same as a regular employee. If a non-family employee would have a payroll file, then a family employee should have one too. If a non-family employee would receive payroll records, then a family employee should receive them as well. If a non-family employee would be included in payroll reporting, then the same should apply to family members. Many payroll and tax problems arise when business owners assume that family relationships eliminate the need for documentation. Unfortunately, this assumption can create significant compliance risks. A lack of records may make it difficult to demonstrate that work was actually performed. Missing payroll documentation may weaken support for compensation deductions. And inadequate records can create challenges during a CRA review. This is why experienced practitioners encourage clients to maintain complete payroll files for every employee, whether related or unrelated. Each employee should have appropriate payroll records, employment information, payroll reporting, and supporting documentation. The goal is consistency. When every employee is treated the same, compliance becomes easier and documentation becomes stronger. Notice the message at the bottom of the slide. Being related does not eliminate payroll documentation requirements. That statement captures the essence of this entire topic. Family members can absolutely be employees. They can receive compensation. They can participate in payroll arrangements. But they should be supported by the same records, procedures, and documentation that would be expected for any other employee. The key lesson is simple. Do not treat family payroll as a special category. Treat family payroll exactly like regular payroll. When that approach is followed consistently, the payroll arrangement becomes easier to manage, easier to support, and much easier to defend if questions ever arise. Once a family member is placed on payroll, the next question becomes, what records should be maintained? The answer is simple. The payroll file for a family member should contain the same types of documents that would be maintained for any other employee. This slide provides a practical checklist that tax preparers can use when reviewing payroll arrangements involving family members. At the center of the slide is the employee payroll file. Think of this file as the complete record that supports the employment relationship and the compensation paid to the family member. The first category is employment information. Every payroll file should contain basic employee information such as the employee's name, address, social insurance number, and employment start date. These details form the foundation of the payroll record and help establish the employee's identity and employment status. The second item is TD1 forms. These forms provide the information needed to calculate payroll tax withholdings correctly. Just because the employee is a family member does not mean TD1 requirements disappear. Completed TD1 forms should be maintained in the payroll file just as they would be for any other employee. Next is evidence of work performed. This is often one of the most important areas when family payroll arrangements are reviewed. The business should be able to demonstrate that work was actually performed. Depending on the situation, this may include timesheets, work logs, calendars, project records, schedules, computer activity records, or other evidence supporting the employee's contributions. The stronger the evidence of work performed, the stronger the payroll arrangement. The fourth category is payroll records. These include pay stubs, payroll reports, direct deposit confirmations, and other records showing how compensation was processed and paid. These records demonstrate that payroll procedures were followed consistently and properly. The fifth item is the T4 slip. At year-end, compensation should be reported in the same manner as it would be for any other employee. Copies of T4 slips and related payroll reporting should be maintained as part of the file. The final category is supporting documentation. This may include employment agreements, job descriptions, written descriptions of duties and responsibilities, performance records, and other documents that help explain the employee's role within the business. These records provide additional support if questions ever arise regarding the reasonableness of compensation or the nature of the work performed. Notice the message at the bottom of the slide. If the employee is on payroll, maintain a complete payroll file. This principle applies whether the employee is a spouse, son, daughter, sibling, or unrelated employee. The goal is consistency. When every employee has a complete payroll file, compliance becomes easier, documentation becomes stronger, and the business is better prepared to respond to questions from advisors, auditors, or CRA. The key lesson from this slide is that good payroll documentation is not about creating paperwork for its own sake. It is about creating evidence. Evidence that the employee exists. Evidence that work was performed. Evidence that compensation was paid. And evidence that payroll obligations were handled correctly. That documentation becomes one of the strongest tools available for supporting family payroll arrangements and demonstrating compliance with payroll requirements. The quality of a payroll arrangement is often determined by the quality of its documentation. This is especially true when family members are employed in a business. A family payroll arrangement may be completely legitimate. The compensation may be reasonable, and the work may be genuinely performed. However, if the supporting documentation is weak, it can become difficult to demonstrate those facts when questions arise. That is the central lesson of this slide. On the left side, we see the consequences of poor documentation. There is no payroll file. There are no completed TD1 forms. There is little or no evidence showing the work that was performed. Payroll records are incomplete or missing. And as a result, any review by CRA becomes much more difficult. When documentation is weak, uncertainty increases. And when uncertainty increases, compliance risk increases as well. Notice that the issue is not necessarily whether the employee actually worked. The issue is whether the business can prove it. In tax and payroll matters, documentation is often the evidence that supports the position being taken. Without that evidence, even legitimate arrangements can become difficult to defend. Now look at the right side of the slide. This represents a properly documented payroll arrangement. There is a complete payroll file. There is evidence of duties performed. Payroll records are maintained and organized. T4 reporting is available. Supporting documents are easy to locate. And if CRA ever asks questions, the business can quickly provide the records needed to support the arrangement. This creates a much stronger position from both a payroll and tax perspective. Notice the progression shown in the center of the slide. Weak documentation creates risk. Strong documentation creates confidence. And strong documentation leads to a defensible payroll arrangement. That phrase is important. A defensible payroll arrangement is one that can be explained, supported, and documented if questions arise in the future. Professional tax preparers understand that documentation is not merely an administrative exercise. It is a form of protection. Protection for the business, protection for the employee, and protection for the tax position being taken. That is why the message at the bottom of the slide is so important. Treat family payroll exactly like non-family payroll. The same standards should apply. The same records should be maintained. The same payroll procedures should be followed. And the same documentation should be retained. When this approach is followed consistently, family payroll arrangements become much easier to manage and much easier to support. The final takeaway is simple. Good payroll records support good tax planning. Tax planning strategies are strongest when they are backed by organized, complete, and reliable documentation. The better the records, the stronger the support for the payroll arrangement. And the stronger the support, the lower the risk of future problems. That is why experienced practitioners place so much emphasis on documentation. It transforms a payroll arrangement from something that merely exists into something that can be confidently defended if ever reviewed.